Hello and welcome to the latest edition of Citrus Mortgage Bites. I'm joined today by mortgage and protection expert from Citrus, Holly Bettles, and we're going to be looking at a couple of key topics that are really on the agenda right now. The first one's going to be what's happening with interest rates following the Bank of England meeting, which was earlier today. And the second is what's happening with stamp duty. Both of those things kind of slightly impacted by last week's budget in the UK as well. So I'm going to be talking to Holly about those. Let's start with the Bank of England base rate decision. So if you haven't heard that already, the announcement today was that the base rate was going down to 4.75%. That's a 25 basis point reduction from 5 to 4.75. Good news for some borrowers. And the first time it's been at that rate, I think we're going back to about mid-2023 when the rate actually jumped from 4.5 to 5%. So finally, this is the second reduction. First reduction was in August, which went from 5.25 to 5% and now to 4.75%. Overwhelming majority of committee members at the MPC voted for the reduction of 25 basis points. 8-1 was the actual majority. So I'm going to read you a tiny snippet as to, well, why did we see that base rate reduction? It was quite widely forecast that we would see it, but actually looking at the report, don't worry about reading it. It's about 85 pages. I'm going to try and translate that for you into one small paragraph. Inflation. So I talk regularly about CPI. If you've seen me talking about inflation before, CPI fell to 1.7% in September. So that's below the forecast of 2%, but it is expected to increase slightly towards the end of the year to about 2.5% because energy prices, which aren't included in core inflation, but are included in the CPI figure, they fall out of the annual measure, and we're going to see a slight natural uptick. There are some inflationary pressures coming out of average weekly pay earnings, which are still quite high. Again, I've talked about those before, and Andrew Bailey, the governor of the Bank of England, has referenced those. And they're saying slightly more under control than they have been, but also services inflation, which I've talked about probably for about a year and a half now, remains elevated, but certainly not at the levels it was. Growth in the economy is expected to be pretty tepid, I think is the word I've been using, over the second half of the year. And actually the labour markets, that's one other topic I've talked about regularly. Remember the squeeze going back a couple of years, just such a shortfall on the amount of labour required, vacancies was high. That is gradually loosening. And the benefit of that loosening is it does take some of that pressure that we're seeing from average weekly pay earnings as the amount of labour increases and the availability increases compared to the number of vacancies. So all of those things has resulted in the decision to drop rates by 25 basis points. So Holly, let me come to you. Is this going to be good news for all borrowers?
No, is the short answer, Richard. So no, it won't be good news for all borrowers, just purely from the fact that if you have an existing fixed rate mortgage, the drop in the Bank of England base rate isn't going to impact you because you're already tied in, you're already guaranteed a rate. If you're on a tracker mortgage, yes, absolutely. If you're tracking at a certain percentage above the base rate, then your monthly payment will drop because obviously the base rate has fallen by the 0.25. So it will help some, it won't help all. It's very, very, very volatile out there at the moment. My inbox is full. The swap rates are yo-yoing. The fixed rates are kind of pinging up, pinging down. I'm not entirely sure that the lenders really know what to do with themselves right now, I think is the best way to describe it. So yeah, it won't help everybody, will help some. And the impact on fixed rates is really, really varied.
Interesting, thank you. And I'm going to talk for those of you wanting to know more about in a post-budget environment following last week's UK budget and potentially in a post-USA election world as well. I'm going to be talking to Jonathan Raymond tomorrow, which we'll publish. You'll be able to see that, where I'll go into a lot more detail about what the economics look like after those two events. From a UK perspective specifically, then, we talked last time we met, Holly, about swap rates. This was, much more relative to the fixed rates. And I know you said they were volatile then. It sounds like they just remain volatile now. So it's a bit of, actually, as a borrower, this is really hard, isn't it? You've got the conflicting information with the Bank of England dropping rates. And yet, mainly because of the budget announcements last week, those swap rates are not are not reflecting that drop. In fact, there's still quite a lot of pressure on the upward trend, I think, and I'll let you answer that in a sec. So lenders must be, kind of trying to work out what the right thing is to do. That makes it hard for borrowers. So if I am a borrower and I'm listening to this and going, okay, so swap rates seem a bit volatile, bank base rates down a bit, what do I do?
I think it's just, and we say the same thing every month. I know we do, but go and have a chat with your broker, because genuinely it is going to be very much what your situation is with this. So the reason there's such a lot of volatility, and you're right, the overall trend at the moment is up, not by tons. We're not talking, the budget from a few years ago where it absolutely went bonkers. It is small increases, small decreases, but the overall trend is upwards at the moment. So if you're thinking about doing something or your rate is coming up, the really important thing is to have a chat, because it might be the 5 years have gone up, but the 2 year hasn't, or the 2 years gone up and the 5 year hasn't. And depending on your circumstances and what your plans are over the next few years, it might be beneficial for you to do something now or to not. I mean, generally, with the conversations I've been having this week with my clients, nobody's really seen a good reason to sit and do nothing right now. We've got a couple of remortgage applications going in just where actually there isn't any point in sitting and waiting any longer, because we're not seeing that constant downward tick that we were seeing before. So get your documents ready, just go and talk to your broker and they'll be able to advise what the best thing for you to do is, but be really wary of that upward trend at the moment.
Okay. And if I am fortunate enough to, gain from the Bank of England base rate reduction, the 25 basis points, 0.25%, what sort of payment amount, what does that actually look like as a typical borrower? Have you got any sort of examples you can give us?
Yeah, I mean, if you look at a kind of 300k mortgage, which in our kind of area is quite standard over a 25-year term, let's say you've had the mortgage for a few years already and you kind of took the punt on the tracker rate, thinking that the base rate would start to drop, the 0.25% drop on that particular mortgage scenario there would be about £45 a month saving.
Okay, 45, not insignificant, especially given apparently 48 days until a word I won't mention towards the end of the year, that Christmas word. But just moving on from that slightly, so that's kind of 48 days. There's a really big event. If I'm actually in the middle of thinking I want to buy my first home, or I'm buying moving homes, I'm looking to move home. 144 days is my calculation until there is a shift in the stamp duty threshold. So I know we talked about this briefly when we last spoke, but again, it feels like the amounts are significant enough. We should just talk about it again. So can you just remind viewers that 144 days time, what happens to stamp duty?
Can't believe you knew how many days were left until Christmas and I didn't. That's a turn up for the books, isn't it? So if we're talking stamp duty in that longer 144-day period, yeah, absolutely. So as we spoke in the last mortgage citrus bites, the thresholds will be dropping back down again. So essentially what this means is if you haven't completed by the end of March, 31st of March 2025, you will pay more money on stamp duty. So like those second home buyers that saw when the budget came out and they increased the threshold by, they increased the percentage by 2%. You're going to have a similar situation where actually literally that one day ticking over, you're going to have a bigger bill hitting your inbox from your solicitor, essentially. So to avoid doing that and to avoid that, I mean, I spoke to a client who's looking at a £500,000 property as a first time buyer last week, and it took her stamp duty from £3,750 because she was buying in London up to £10,000. So it's massive for some people. So what we need to do is get your paperwork ready, have a think about what you want to buy if you're a first time buyer. Just go and talk to a broker and say, look, I maybe wasn't thinking necessarily about doing this right now, or I thought maybe I didn't have enough deposit, or was I really ready, or I might be in a tenancy still for a couple of months. Go and have the chat, because you don't know what schemes are out there. You don't know what potential borrowing that you could do. We've got some lenders doing, 5.5, 6 times income. That might mean you can actually do this now where you didn't think that you could do. So go and have a chat and just have a think about what you're doing. If you're in a chain already and you're thinking, oh, that might be a bit tight, you need to be speaking to your solicitors and make sure this is on the radar, not just for them, but the entire chain. So if you've got other people in that you're buying from, or that are buying from you, you need to make sure everyone is in the same boat here, because you don't want anyone else to get caught out and not having realised what impact that's going to have.
Brilliant. Okay, that is really helpful, Holly. And I just reiterate, how watching a 5-minute video could save you thousands of pounds. So I really hope that's been useful. I really hope if you weren't aware of it, it's brought it right to the fore of your focus to try and save you those thousands of pounds. Great. That's really helpful. Thank you ever so much, Holly. Thank you for updating us on what's happening with rates. The next Bank of England meeting is the 19th of December. So there is speculation about what will happen, although originally I think there was a lot of expectation that it would be a further reduction. That's changing slightly now. What did the governor of the Bank of England say today about it? He was quite open. He said the committee continues to monitor closely the risk of inflation persistence and will decide the appropriate degree of monetary policy restrictiveness at each meeting. There we go. Read into that what you will. I think it's pretty non-committal as to what might happen in December. Obviously, on Citrus Mortgage Bites, we will update you as soon as the outcome is known. We'll update you. We'll let you know what's going on with the stamp duty position, with swap rates, and we'll give you an update then. That's it for Mortgage Bites for today. If you are wanting to hear a lot more about the world post Donald Trump and the election outcome, and indeed the UK budget and what that means potentially for government spending and government debt and what the impact might have on a wider scale, just a reminder, I will be interviewing Jonathan Raymond, investment manager from Quilter Cheviot. Fantastic guy, really looking forward to interviewing him, and we'll get that out to you and make it available. So that's it from me for today. Thank you for watching Mortgage Bites. Take care and bye for now.